So we connect in a lot of ways when it comes to charts and discipline, and that's what I'm really want to focus on, charts and discipline. And I'm really looking forward to talking to you. We're going to get into charts. It's enough about me, and let's get into the meat of this webinar.
All right, gang. First off, let's talk about one of our favorite patterns that we talk about every day in the Momentum Room, and that is the H pattern, or what I like to call the LaVeitch pattern. The H pattern is defined as a large move down, followed by a retracement bounce that looks like a rounded top. The resulting chart pattern looks like a lowercase h. It's a very easy pattern to find, and it's one that I have found to be a very high success rate. Usually what I'll do is I'll get an initial entry right around the top, which is what I call the hump of the H, and I increase my size when the stock breaks the H to the bottom, and I look for a move to the measured move is going to be the width of the H. I'll show you a couple examples of this in a second. You're going to place a stop. If you're going to be wrong and it goes higher, you're going to put the stop right at the top of the hump. So if you got in, let's say, a stock and you're risking 10 cents, that's a low risk, high reward scenario. I would take that trade all the time. So let's talk about one stock that we are looking at with the H pattern. We're going to talk about X1 from actually yesterday. And as you can see here, we had a nice big move down, about $1.50 right about 10 minutes into the day. And then as you can see here, the stock tried to rebound a little bit, but couldn't, and it started to roll over. This is where I see my H scenario developing here. And as you can see in the next slide here, it makes it a lot easier when you draw your lines, gang, as you're looking at your patterns, because what it'll do, it'll allow you to pinpoint exactly what your entries and exits are going to be. Okay, so entry is the top of the is around the top of the H, or hump, a breakout of the hump to the upside would be your stop. In this instance, I'm looking to short around in this range 68.20 to 68.50 with stop set right around here, 68.75. So I'm risking about 30 to 50 cents for a move that should give me about, based on this move, about $1, $1.20, something like that. And as you can see on the next slide here, here's your move. Notice the results of the breakdown, a solid $1.20 move. Again, low risk because you're starting in here. You're getting in as it breaks this pattern. And look at the move you're going to get. You're going to get 1, 2, 3, 4, about 45 minutes of selling from the bottom of the H. So that is probably my most favorite example and of a good chart pattern that has a good success rate, gang. Another one, I'm going to let Mike go over this one, and that is the bull and bear flags. So take it away, Mike, with the bull and bear flags.
Okay, thanks, Steve. And with that X1 trade, Steve and I did really well. We're always working the trade. You're going to hear where we're in it with our entries, our exits, our targets, measure moves. I mean, we talk our trades through, and that's really a bonus about our, room. All right, bull and bear flags. Everyone knows most likely what a bull and bear flag is, okay? There's two parts, the pole and the flag, okay? The pole is a sharp price increase or decrease. I like to watch bull flags and bear flags before 11:30. It gives me an opportunity. It gives me that, what's strong, what's weak, what's holding in, relative strength, relative weakness, okay? The flag is the big momentum move in the form of price consolidation. I look for my initial entry within the flag. I always talk about something where I feel like and love my situation. I will get a feeler in this position within that flag. I like it through highs, and when confirmation and hold, I love that trade. Okay, when it breaks the flag in my direction, I look to add. Measure move is the width of the flag to sell cover stock in my direction. I'm going to go over an example which we just recently talked about in YRCW. It's a stock that we are looking at. Real quick before I finish this with the bull flag, we're not just trading Apple and Netflix and Pricelines. We are finding stocks that are doing good volume where there's a lot of traders like, what? Where did you get that? We've been trading X1, Steve and I, since the 30s. We're comfortable with it, and now it's a $70 stock that we're doing really well in. So YRCW, you see a big move off the bell. You see a tight consolidation. I am forming my prices between 31.99, let's say 32 area, and 32.50. It's a 50-cent channel. I'm looking for a break above 32.50 to enter. I understand my risk. As we continue to show you the trade, this stock is a low-risk, high-reward setup. I don't want you guys to leave this webinar without understanding your risk. We teach it, we trade it, we absolutely preach it, because what you have to understand about this business is understanding your downside risk. Okay? It's easy when you're in the money and making money. The hardest thing to do mentally in this job is when you're wrong. And we'll get into that a little later. As you can see, a perfect bull flag setup, dollar measure move. My target should be around 33.50 because that's the pole, the range. As you could see, this stock went even higher, but how we trade is we are always taking profits into the move, okay? I am not holding tier 3 or max size through the whole trade because I don't know where this thing's going to reverse. I just have to put all my data into the trade, take off profits,
resistance,
trim and trail, keep trimming and trailing, and try to maximize my gains. This was an awesome trade. If you look at the daily, I can't show it to you right here, but YRCW has been an unbelievable active trading stock.
You know, and I'll throw out the daily real quick of YRCW, Mike, just so everybody can see it.
Okay, and maybe someone aren't familiar with the YRCW. As you can see, YRCW on the daily, okay, has been a parabolic type stock. We've been looking at this thing since about $12, that bull flag on the daily chart. Okay, so as you can see, we're in it, we're trading it, it's on our radar. We might not trade it every day because it has to have one of our favorite setups. All right, go to the next one, Steve.
Before we go on, I just saw a question answered. What time frames? I want to enter the most important time of day for Mike and I, guys, is usually the morning. And the reason is because there's much more volatility and free-flowing trading where the computers haven't really gotten involved in trying to manipulate the stock and the black boxes. I like to trade when I know there's going to be order flow, there's going to be true breakouts and breakdowns, and that usually occurs in the first 45 minutes to an hour and a half of trading. So Mike and I in our room, we take advantage of that time to the fullest. Not to say we don't trade all day long, but I would say 80% of our days are made trading the morning and trading the open hours. So when we're trading, we work normally on the first half hour, we go anywhere from a 1 to a 5 minute chart. And for me, for instance, after the first half hour, I'm always on a 5. Once in a while, I'll look at a bigger picture, a 15 or a 30. But I'm pretty religious to have my 5 minute up there at all times. Mike is a little different, depending on the stock. He might have the 1 minute up there. He might have the 2 or 3. But again, the most important thing that I want you guys to take out of this is that for us, trading the open and trading the morning is the best time of day to do the type of trading that we like. Okay, now I'm going to go over a bear flag example. Here's an example of a bear flag that's set up yesterday in UNXL. The stock has been pretty beaten down. This one was taken when it was at 25. And as you can see, you had the big move down here, followed by what looked to be trying to bounce. And as you can see, it's developing a nice bear flag scenario. Notice the move down and consolidating around the bottom of the move down. As you can see here, you draw your lines on the flag so you know where your breakout and breakdown is. I know that if it gets above this level, I'm getting out of my short. If it breaks this level, I'm going to add to my short. In this case, my flag's 23.56 to 24.52, roughly $1 measured move. Stops would be set at the top of the flag, right about here, 24.52. Again, a very low risk, high reward scenario. I will start shorting in this range against the flag. When it breaks this bottom of the flag here, I'm shorting more, looking for a bigger move. And as you can see by the next slide, notice the resulting trade. It breaks so far at 56 cents into, looks to be support area here. But again, here's your flag. It wasn't that big, but it was a pretty flag that we were able to take advantage of. You got 1, 2, 3, 4, 5. you got about an hour's worth of selling into that move. And that's the thing I want you guys to understand. We are low risk, high reward scenario traders. We're looking for these patterns all the time. And if we find them, we're going to take advantage of them. And there are times when the patterns do not work. And as we go on a little in the webinar here, we're going to give you examples of some that didn't work today even. For instance, I was trading Noodles. And we'll get into the chart pattern later on, but Noodles gave us an example that did not work in our favor. Now I'm going to get to a couple of questions here. Isn't the measured move of a flag set up 50% of the pole's height? Usually when I look at a flag, gang, there's different ways you can look at it. For me, I look at the width of the flag as the measured move. I don't really put the pole into effect here, and I'll show you why. If we go back, for me, looking at this, I don't really think that 50% of the move is a true gauge, because if this flag was down here at like 24.20 or 24.30, and all you're risking, right here is at 24.60, you're missing out on 20-cent measured move. Again, it's arbitrary, but I don't really take into consideration the pole. I just use that as my line for where the flag is starting. Mike, do you have anything to add on that question?
Yeah, let me just say one thing with that. A measured move, okay, is not an exact science. So depending on the range of the stock, depending on how quick the pole is formed, how quick, how much width the flag has, how much, momentum, there's so many factors that go in. This is just one way to look at it. I look at the pole 100% a lot of times. You have a dollar pole, 50% flag, dollar run. You have resistance on the upside, a 2-day resistance, a 2-day support. So there's a lot of factors that I want to teach you. I can't do it in the hour time here, but you have to remember, it's not an exact science. This just gives you, okay, your individual expertise, an entry, an exit, and a target. Okay, someone's target might be, this is my entry, and I'm looking for a gap fill $5 higher. So there's a lot of situations and scenarios that can change this perfect example of a bear flag. Okay, what I also want to say is, how about when patterns don't work? That's the question I always want for people to ask. Okay, saving money in this profession is just as important as making money. And I always preach that. And, Mike Milani mentioned I'm, almost a pig when it comes to money management. Well, guess what? That's why I'm still here. 13 years in the business. I can't complain. I'm enjoying my life. I take vacations. I have money. I love this business. But it's hard work. And I'll use Noodles as an example today, okay? I saw an ascending wedge. Does everyone see that ascending triangle? We had an opening range. And as you can see, the lows became a low, a higher low, a higher low. It got really tight. 45 was my resistance. I was looking for a break above 45 around 11 o'clock. Okay, I had a feeler. I didn't like it. I didn't love it. Would I have loved it if it held 45? Of course. It never did. Discipline is huge. I had a feeler. My stop was 44.50. Lost on the trade. I lost pennies. If I attacked 45, it could have been a very, disastrous situation. I don't put myself in those situations, or I should say this, I'm not a machine, so of course I do make mistakes, but as a teacher and a trader, I'm looking for the lowest risk potential trade. This was a low risk, high reward setup. My out was 44.50. Someone in our Momentum chat room asked, did that change? And I said, yes. That red bar right there, right around 44, that changed the whole situation of the stock. If you're long, short term, okay, don't use the word scalping, don't use the word, I can't stand it. We're not scalping. We're looking for tight consolidation with low risk and high reward setups. This stock failed. We did happen to reverse our trade because I know the ceiling was $45 and made a little bit on the downside. But to me, if I was looking at this trade failed. This was a failed bullish ascending wedge, which I didn't get hurt in.
And again, stock, guys, go ahead, Mike. I'm sorry.
Now, this stock, if this chart went through 45, we were looking at a 46 print. It never happened, and we stayed away.
Again, if you're looking at the chart, gang, right now on the 5-minute, if I saw this chart, I'd be licking my chops for a trade through 45. Why? Because this stock looks perfect, right? What do we know about 45? 1, 2, 3, 4, 5, 6, 7, 8, 9 times it failed at that level. 9 times. But it still stayed in a bullish setup right here. So you had about a 70-cent ascending triangle that if it got through, you knew you were making probably 70 cents to $1 like that. Okay, now what happens? It breaks. Guess where we shorted, gang? Right on the break of the wedge. So right around this bar, like Mike said, and we took it for a pretty decent trade. I covered mine probably around right about here because I reshorted, added some more when it broke lows of 43.61 right here. And I took a little bit more out of the trade, and then I was done with it. And that's the thing. Sometimes patterns don't work, and you have to make sure you react. What we do best, Mike and I, we react to our chart patterns. We react to our trades. If you are in a stock long and you see this type of break, are you saying to yourself, oh, this looks like a good enough stock, it should be strong, I'm going to buy more? And all of a sudden you're doubled up, tripled up down here at 43? No, you don't want to do that. You want to say, all right, well, the long didn't work. I know my out's 45. Let's short somewhere in here, risk a 50-cent trade, and see if I can't make $1 on it. And that's the thing that, like I said, we preach this every day in our room, gang. You have to be flexible with your ideas. You can't come in and say, I love noodles long, because guess what happens? If it breaks, you're going to be stuck holding the boat, and you got to be disciplined enough to get out. One of the other beautiful things about trading is, guys, you can change your mind on a dime. And that's the thing why I like X1 the most, is because when I can short X1, I can buy X1, and when it breaks my levels, I can short X1. And it's the type of stock that gives you a great range. You know, a lot of people say to me, why do you trade 1 or 2 stocks a day? Guess what? I tell them if I can trade a stock like X1 that moves $3, $4, $5 at a time, and I can trade it pretty well, I might as well stick to it. As long as I'm making money, why not continue to make money? And I don't know, for those of you who have read my blog post, that's what I say. If it ain't broke, don't fix it, gang. Make sure you stick to what works. You have anything to add there, Mike?
No, I mean, it doesn't matter, okay, what other people are looking at. It doesn't matter their finances. It matters what you're comfortable with. I always talk about this. Get in size that you're comfortable with, stocks that you're comfortable with. Pull up Apple today real quick, Steve. And Apple was a very, very good wedge this morning, okay? This is a symmetrical wedge. As you can see, Apple had its opening range. It was getting tight and tight. I very rarely trade Apple. I didn't even touch it today. I told the guy next to me, you know what, Apple looks tight. I'm going on vacation tomorrow. I had a really good morning in DDD. We'll go over that one next. And I said, you know what, look at Apple. Apple's tight. You got about a $2 to $3 potential measure move here of the opening range. And as you could see, the tighter a stock gets, my risk in Apple here was maybe $1, okay? $1.50. But there's one thing that you have to understand. There's 2 things about risk. There's dollar amount, how much money you're willing to lose, and also how much, price action you're willing to give up. Okay, so 1,000 shares of Apple and you're giving it 20 cents is $200. If you get 100 shares and give it $2, it's the same risk financially, okay? So you got to come up with 2 risk scenarios. Range of stock and also size. As you can see...
Go ahead. I wanted to answer that question, but finish what you were saying.
As you can see, the stock is a breakout above 424 today as he, extends the chart and just shows you the potential and how powerful 3 or 4 charts can be. So extend that chart out a little bit, and he'll show you what Apple, turned out to be, and stop it right there for a second. You don't have to be selling at the highs. Take your profits, right? You know what? I'm selling 426. I'm going to hold a little bit, trail it to 425.50, enjoy your day, and get out of here. No one's telling you to stay all day, right? You don't get paid by the hour to trade. You get paid to make good trades and get in low risk, high reward setups. When I speak at these seminars and I ask people in the room, why is everyone here? Everyone raise their hand, I want to make more money. Well, you know what? Instead of worrying about how much money you want to make, worry about how much money you could save when you're wrong. And the more money you save, the bottom line, you'll put more money in the bank. Okay, and that's what I like to do. I like going every month, putting checks in the bank. I don't care what the market's doing. I don't care where the stock's going to go. When I'm out and I take my profits, that's it.
Okay, now I'm just going to answer a question that somebody asked. Somebody asked, how do you add and trim after the breakout? Let's use Apple, for instance. So you're in this trade right now, right, from, let's just say the middle, right around where the apex is starting. What I would like to do here is get a tier 1 here, and maybe, and again, this goes for any pattern, so I'm just using Apple's example. Maybe I'll get a tier 2, 2.5, depending on how much I love it when it goes through here. And guess what, gang? I'm probably selling 50% on this bar right here. I just made $1.50. I'll sell 50% of my trade right here. Why? Because I made good money in the trade. I mean, look, you're here from 422.5. You're selling 425. I mean, I'm just looking to lock in money at this point. Yeah, I mean, it went much higher, went to 428. But you lock in 50% of your trade right here, you're never turning this into a loser. You're making X amount of dollars on this trade. It pulls back to where you bought it. Guess what? You get out, you still locked in $3 on half your trade. And that's the way I want people to think when they're in our room. I want people to realize that you don't have to hit home runs all the time. And I use this baseball analogy all the time. You know, for the older guys in the room and girls in the room, Pete Rose, you know, Tony Gwynn, singles, doubles, triples, the occasional home run. You know, Ryan Howard nowadays, he's a home run hitter, but guess what? He strikes out a lot too. And Mike and I don't strike out a lot when we're trading. We hit a lot of singles, doubles, and triples, and like I said, the occasional home run. Our average is very good, and you know, our track record is pretty good as well. So for this type of trade, you're trimming as you feel comfortable selling. There's no real science behind it. I would, if I'm trading it based on the move, I'm probably selling a little here because it made a lower high right here on this bar. So I'm probably selling here, but I am definitely selling on this explosive bar up, which was $3. I hope everybody understands the thought process and how Mike and I think, because I think it's really important that you guys understand that making money is okay. If you didn't hit a home run, so what? And I tell the guys in our room all the time, it doesn't matter. You're still walking out of your office. You're going home. You've added money to your bank account. You feel really good about yourself. And as time goes on, then you hold a little longer. Maybe you're the kind of trader, you buy 1,000 shares. You sold 900. You got 100 for that move to 428. And that's where you're going to get at some point. But we constantly drill that into everybody's head that it's okay to hit singles, doubles, and triples. You don't have to hit home runs in the market.
Yeah, and that's a great point, Steve. And, you know, I always say this, okay? And the people in our Momentum chat room who listen to us, who follow the rules, are better traders, okay? I can promise every single one in this room, I can make you a better trader. I can't guarantee you your money. I can't guarantee that you hit your goals, okay? But with the foundation and the risk and the stock picking and the money management skills that we offer, I will make you a better trader, okay? It's like someone teaching me golf. If I don't practice my skill, if I don't practice and practice and practice and be completely disciplined, I'm not going to get better. And it's just like trading. I'm young. I think I'm 37, 38. I'm trading for 13 years in this business. I think I'm young, and I'm getting better and better. And I went through some ups and downs, but I learned from every experience. And I really want you guys to understand that this webinar, I picked this date specifically to do this because earnings season starts on Monday, right? And you guys have all the opportunity to get involved and learn this earnings season with us. We'll have something later. I'll talk about that later. But, you know, unbelievable opportunity. Earnings season can make you a lot of money, and you can learn so much. I'm so excited. So let's talk about 5 rules for momentum trading. I'll go over the first one, and then Steve will go over the next. And you see 5 rules. I have 20-plus rules that I love to teach. We do lessons. We talk about them constantly. You know, once a month we'll go over those rules just for confirmation and, you know, so you absorb it. because there's nothing worse in this business. When you break a rule, okay, the money doesn't bother me that much. I know I'm going to make money every month. But consistently, if I broke a rule, I get so fired up because that's where I am losing. Oh, let's buy this stock. It's going up. It's going up. It's got to come down sometime. No way. Okay, that thing could squeeze you and you will be out of the job. So accept losses. Run right into this. To me, accepting losses is the most important thing in this business. If you can't admit that you're wrong, you better change that real quick, or you will be fighting and fighting to be a professional and profitable trader, okay? In any industry, costs of doing business, you have to accept losses. I lose a ton, but if I lose a dime and make a quarter, I should be successful. And that's something you have to really know. Prepare yourself mentally and emotionally. This will happen, okay? If you're wrong and your stop is taken out, get out, obey it. It costs a lot less money to get back into a position that looks like a good setup than hoping and praying and averaging into a position that has failed on you. Okay? Don't forget that. The first stop is the cheapest. Do not follow the temptation to hang on, like I just said. If you do not always obey this rule, you will get crushed one day. I've seen it. It's happened to me. That's why I put this as the most important thing. To me, the best thing about trading is making money, and the worst thing about trading is losing money. So what do? I try to make money as many days and many trades as I can with very little risk.
All right, gang. I just saw another question. I'll read it out in case you guys can't read it. It says, I think it's hard to enter at the right place when triangles and wedges break. Sometimes I buy at the high of the tail and the triangle ends up breaking the downsides. What I like to do, gang, is when you have, and I'm going to go back to my chart again so you can see it. Okay, when you have a triangle like this, guess what? Do you want to be trading it in this range here? Probably. Why? Because if it breaks the downside, you're out. If it breaks the upside, you're adding. So it's better to do it down here initially, okay? Initialize a tier 1, maybe a half a tier inside here somewhere, right in the middle of the triangle. So if you're right, you're going to double up and you're going to make money. If you're wrong, you're losing, X amount of cents there. I don't like to initialize here and attack here at the same time. I like to get a feel for how the stock is trading. And look, I mean, it went 1, 2, 3, went about 35 minutes in this triangle right here. Tailed and came back, tailed and came back. Guess what? If you're in this range, you're probably going to add some here and it pulls back a little bit. But guess what? You finally get that add and it never breaks your triangle to the downside. If you're buying this tail right here, guess what? You're probably panicking because, A, you initialized up here, right? And all of a sudden it goes $1 against you. Well, okay, was that probably the smartest thing to do? No. You want to initialize in this range right here. And I'll draw my lines in here because that's the dead middle of the triangle. The stock is moving at a pace where, guess what? You can get in and it's sitting in this range for so long, you're not losing that much money. Okay, but if you attack up here and you got stuck on that tail, you're probably hitting it out here, getting frustrated, and then missing the crux of the trade, which is when it went through again and didn't look back. So again, get in the middle of the triangle initially, and if you're comfortable enough to add when it breaks the triangle to the upside, knowing that you're out. If I added right here and it broke again, I'd probably get out probably where I broke even here on the other shares. We call that the gray area, like Mike just wrote. It is called the gray area. So that is basically how I would say, June, how to trade and try and stay away from buying tops and bottoms. But let's get back to the rules.
Let me just say something real quick, Steve. T3Live.com always say, real traders, real time, right? I always like to say, real person all the time. And that's what you get from us, okay? We are traders, okay? I'm not faking this. I'm live. I'm trading all day long with you guys. If I'm in a bad trade, I'm not going to, hey, sit back and relax. I'm stressed, probably like all of you guys, when positions don't work. And that's what I sort of, thrive about this job, because when you are wrong, you want to really, really learn from that and work it the next trade, but not getting married to that wrong position. And that's one of our rules. But this is reality. I'm a trader just like you. I want to make money. And I always say I'm a real person all the time, and that's what you get from us. Sometimes I'm crazy. I'm a trader. Sometimes I'm, making jokes, but this is the reality, and that's what we're in it. We love it, and we're lifers when it comes to trading. So don't pick bottoms and tops. Steve, you can go over this one. I just went over the first one.
Okay, thank you, Mike. All right, gang. Again, don't pick bottoms, don't pick tops. You don't want to get caught up in trying to pick the tops and the bottoms. In the long run, you're going to lose money. And like that Apple chart just showed you, you attack the top on a tail, you're going to wind up getting stuck with a position you probably don't want. When you find the trend, gang, follow it. As everybody says, the trend is your friend. I find a lot of times when I'm not making money, it's because I'm shorting a strong stock looking for a pullback. And I'll tell you what, when the market was getting killed 2 weeks ago in X1, I was trying to short it. And I shorted it looking for a $2 move. And guess what, gang? I lost $1.50. I was looking for this big move down that never happened. The stock exploded in my face. So what I keep trying to say is no matter what the market's doing, your stock has a pattern for a reason. And you have to obey your stock pattern. If you're trying to fight the trend, it's going to be a losing proposition in the end. It's very easy to say to yourself, this stock is down or up too much. You get mentally married to the stock. Problem is they often continue much further in that direction. Again, that's pretty self-explanatory. You don't want to hold a position against you just because you believe that that's what it should be doing. If I was writing this on the board, I'd put should in quotes and italicized bold print. It shouldn't do anything. It's going to do what it wants to do. It's not a person. It's just going to react. It's a computer program, whatever the case may be. But the one thing that we have at our disposal that puts us in an advantage is we're smart chart readers. We know if a stock doesn't have a good pattern, we're going to stay away from it. If a stock has a great pattern, we're going to react. It's very important to let the stock tell you when it's ready to change direction. Again, talking about X1, when the market was getting killed, it held. Even when the market was going down, X1's at 75 now. The stock ran $25 over a week and a half in a market that, other than today, really hasn't been super duper strong, but the stock itself has been an absolute monster. We are not swing traders. We are momentum traders. We look for great intraday setups with low risk and high reward. If you guys are actually, I don't know if you're going to print this out or if you have this anywhere, that's something you want to write down. This is the most important thing right here. We are not swing traders. We look for great intraday setups with low risk. I would highlight that, and high reward. To me, that is one of the most important things you should take out of this webinar today. We take low risk to make good money. I'm risking 50 cents to make $1. I'm risking 10 cents to make 50. Okay, and that's the way we think, that's the way we trade, and that's why we are still doing this 13 years later. Bottom fishing and top picking are for the birds. Self-explanatory, gang. We don't even need to go over that one anymore. Go ahead, Mike.
All right, I want to get through this a little quicker because I really want to get to some questions, but don't trade your P&L, okay? To me, when you trade your P&L, the key is when you're up, it's very easy, right? Oh, I'm up on the day, I chill, I take my profits, I can sit back and relax, I keep booking a little more profit. The problem is when people get down, they tend to trade differently, okay? Trade the same way all the time. That's how you get to the bank, taking profits, doing your thing. But when you do get in a bad trade, don't try to hit that home run when you're down. The mentality of that situation is one of the hardest things for me to get out of my head. If I'm up, it's easy. If I'm down a lot, you know what I tend to try to do is make it all back in one trade. That's not how I trade. So what are the odds of me making that back? Very small. So I have complete rules. I can't go over all of them. I have percentage rules and this and that. And, obviously if you join our team, I will be absolutely 100% talking about this all the time. I believe, Steve and I, the main reason why you guys need us is because we're protecting your business. 50 to 80% of the people I talk to have no clue about money management. 75% of the people that talk to me say, oh, trading is 75% mental and 30%, technical. Then why focus on technical so much? It's a money management discipline game, and that's what it comes down to, okay? So stick with your plan, play to your strengths, don't get caught up in the emotion, don't get caught up in the person next to you who's going through a tough trade. I love when someone says, oh, it's smart to take my pain. Why would I want to take someone else's pain? That makes a lot of sense to me. That's something that you don't want to do. Okay, let that person deal with it, and don't worry about it. It's his problem. Keep your business into your business. Your business is key.
Okay, and again, I've mentioned this before, gang. Don't get married to stocks and your trades. If a stock is not working for you, you don't have to make your money back in that stock, i.e. X1. If X1's kicking me in the pants today, guess what? I'll move away from it. I'll go to one that maybe Noodles that's trading a little better for me. Let's see. The market is an endless supply of opportunities. Move on to the next one. Self-explanatory there. Well, this is important too. Do your game planning each and every day so you're armed with a plethora of in-play stocks. Next weekend, when earnings start, we're going to have so many stocks to look at. It's going to be great, and hopefully you guys will be able to take advantage of joining up with us and seeing what we're like during earnings, because it's definitely interesting. We have a lot of different things to look at and a lot of different ways to make money, hopefully. So, let's see what happens. There are plenty of fish in the sea. There's 10,000 different stocks you can look at any given time, gang. There's 10,000 different stocks that have different patterns on them. Find the ones that work and trade them.
Okay, let me get to the last rule, and then, okay, it's okay to stop. If you're feeling good and you're happy with your day, enjoy the money sometimes, right? I always say there's a lot of time frames throughout the day. You have 9:30 to 10. You have 10 to 11:30, 11:30 to 2 o'clock is lunch, and 2 to 4 is the close. I would say 11:30 to 2 o'clock, I am 99% away from my desk. If I'm in a position, I put hard stops in. I don't want to get caught up in the slow nonsense. Yes, once in a while there will be a great, lunchtime trade, and that person say, oh, you're at the gym and this thing went up $3. Well, you know what? For the next 3 weeks, they'll tell me, oh, I come back and what happened? So I'm all about percentages. I make a lot of my money in the first hour, hour and a half of the day. And if I do decide to stay, I will absolutely be disciplined and only giving back percentages of how much I made. That's another story. I always say if you're up at lunchtime at your goal, you should never leave your home or your office negative. You're green that day, and we will talk about that later. One of the beauties about momentum trading compared to swing trading is 99% of the time we're flat. We don't allow, the market macro news to hurt us. I think it's the most protected way to become a very disciplined trader. You could expand. I have a PA account. I trade options. They're a little separate. But just for your momentum trading account, go flat. It's so relaxing and so like, all right, wow, the market's up 10, down 10. I'm coming back in the next day only looking for our few favorite patterns. Wedges, triangles, flags, H patterns, 2-day high-low, daily chart breakouts. These are all these things, okay, that we talk about all the time. Just for example, today, and I'll get to some charts, don't turn a great morning into a losing day. Even if you book just a little bit, your account is always going up. The key is growing your business, right? That's it. That's the most important thing. Let's look at SELG, for example, today. And SELG was a 52-week high breakout, okay? Here's the thing with SELG. This is something that you have to know. You know what? Change that. Pull up SSYS for a second. I'm going to do 2-minute chart work on SSYS real quick. I knew the daily chart, the 52-week high in SSYS was 94.90 before today. Okay? We had a 5-minute high breakout, a 52-week all-time high breakout. I sold into strength. Why am I selling into strength? Because SSYS could fail. And what it do? It failed on me. I made an awesome trade. I had reasons for in it, to get in it. I had my reason to get out. Once it traded below the all-time high, I said, you know what? I took my trade, I moved on, because I always say, and then we'll get to questions, the first 30 minutes of the day, I am all about booking. Because mentally, when I am up early, percentages, one, I feel better, and two, the odds of me making money on that day are a lot higher. So that's the rules. I hope this was a good foundation for you guys. I have 15 to 20 other rules. I could give you so many examples. Keep it simple and be confident and adapt quickly and don't get married and stick with your plan.
To stocks.
And this
not don't get married.
Yeah, don't get married to stocks. So that's part of it. Let's get to some question and answers. I'm so happy you guys are here. I really, I'm excited. I love teaching people to become better traders.
And just an FYI, guys, this is the way we are on our radio broadcast as well. So we're not just acting like this because we're doing a webinar. This is the true Mike and Steve that you're going to get every day if you join up with us. But getting to some questions, what specific moving averages do you guys use? For me, for instance, I use the 8 and 21 moving average when I'm talking about a 5-minute chart. The reason I have other ones is because I do a lot of chart work intraday, and I'll throw up a daily, and instead of changing, I like to know where all my moving averages are. But most of the time, I'm using the 8 and 21 more than anything else just for support and resistance. I don't really worry about if they cross over or anything like that. I care about them using them for support and resistance reasons. Let's see. Could I explain the measured move again? Sure. Let's go back to Apple. Okay, on a 5-minute basis. I'm looking at this chart right now, gang, okay? Apple has this beautiful wedge that it started in the morning. I know that the low of the wedge is 421.17 and the high is 424. So I'm looking at about a $3 measured move, right? So if I take out, if it goes above this tail here, which was 424, I'm looking at about 427. And guess what, gang? We got that measured move and then a little more to boot. We got a, basically a $4 move. Okay, but the width of your triangle, the width of your flag is the measured move. Okay, so it's a very simple way of gauging what you can expect to get out of a trade. If you're short, if this was a short and it broke down, I'd be looking for a $3 move to the downside. Very simple way of gauging where you should be able to put a target on your stock. You want to take the next question, Mike?
Yeah, I just typed it in. Is there a reverse rounding? I just said it's a rounding bottom. An H is really a rounding top, 50% into that range. I do think, pull up NDLS for the last couple of days. Can you pull up like a 3-day chart on it? Right there, just leave that. As you can see, right there, the rounding bottom a couple of days ago.
Right here? Or down here?
Either one, or even up top. Right where the start of the right there. That's really the opposite of an H. That rounding formation after a bullish move is, if you turn that around, that's a lowercase h. So it's really something that I look for more. I love those type of patterns. Really, our concentration on our bearish and bullish triangles, bearish and bullish H's, bearish and bullish wedges, and bearish and bullish flags. And for those things, okay, for those 4 patterns, I can promise you, okay, that gives me way more information I need every day. Okay? When I teach traders, I give them one key thing. When you're a new trader, and I think this is great for new traders, experience. We got someone in the room that has 5-6 more years experience than I do, and he's thriving right now. Okay? He thanks me every day. So it helps new and old traders all traders can learn from this, okay? And it's something that we just love to talk about. We love to talk trading. You know, I talk to Steve throughout the day and on the phone and, you know, talk about what we're looking at tomorrow, and we're getting excited to trade ABC and XYZ, and that's what it's about.
Okay, I see a question here. I see the candle before or on 9 a.m. Do you always use pre-market action? This is actually showing 9:30. I don't know why it comes up looking at 9 a.m. here, but if you look at it, if you click on it right here, it's showing 9:30 as the first bar. I don't really pay attention to pre-market action when I'm looking at the stock. I mean, I look at it to see if it's strong or weak, but levels in the pre-market don't really matter to me. It matters once 9:30 hits. Let's see. How many bars in do you draw those lines? Again, it depends on your time frame. Look, here's a 5-minute of noodles, right? If I want to put a 1 minute, it's a much less defined chart with a lot more noise. I mean, look how crazy that chart looks compared to my 5-minute, right, where it looks a little, you know, prettier than the back and forth action. I would say, depending on your time frame, though, I would like to see, when I see the pattern, that's when I start drawing my lines. If I see something like Apple, for instance, let me go back to Apple because that was a nice pattern. If I see this developing, gang, and I'm going to get rid of my lines for a second so you can see what I'm talking about. Here's what I see, right? What do I see there? Back and forth action, no real pattern, right? Another 5-minute bar up. Now I'm starting to see a little bit of a triangle possibility with higher lows and lower highs here. A little more, a little more, a little more. Okay, boom. Now, what am I doing here? I'm saying to myself, all right, I'm trading this stock. It's giving me a nice upside line here. Nice line here. There's my wedge. So I really don't draw mine in until I really see it. That way I know where it's supposed to go, or at least I have an idea where it's supposed to go. And I try, again, make it simple for myself. I know where I'm getting out. I know where I'm adding. I know where I'm getting in this tight range here. And as you saw, the stock broke out to the upside.
Yeah, just to answer that question, Steve, real quick, 100%. 100%. 2-day trades, 2-day charts are always on, okay? I always have a 5-minute and a 15-minute chart next to me from yesterday. It's so critical. Even Apple there, look at that chart. Look at yesterday's high. Once you got support above yesterday's high, it gave you another reason, another confirmation. We're looking for confirmation. We're looking for all the factors that could, you know what, this thing has a reason to go up. And that's what it's about. It's not just about a 5-minute bar. You have to put everything together. And one thing you have to understand, a 5-minute chart, I like to look at a little longer time frame, maybe in the afternoon. As the day, to me, to look at a 15-minute chart in the first 15 minutes, all you're getting is a range. So if you are looking to trade the open a little bit, maybe have a shorter time frame, a 2-minute, a 3-minute. It gives you a little more picture in the first 30 minutes. But after 30 minutes, then I definitely go to 5-minute. If I enter in a 5-minute bar, I'm probably exiting on a 5-minute bar. If that topping tail and the next bar is lower, I mean, there's so many things that I could teach you. I just don't have the time right now. That's why I'm looking forward for 208 of you to sign up on Monday, because this is going to be awesome to teach. One, because I know you guys could become better traders from this, and that's what I'm here for. So, you know, to answer your question, 100%. 2-day, daily charts, weeklies, you all have to factor in. It's incredible. You know, it's incredible to learn, you know, all these different patterns, but you need a plan. And we have a very good trading plan. Incredible trading plan.
Okay, guys, I'm going to take this question here, and then I'm going to give you all the emails you might want to write down. Do you carry over patterns to the following day? Example, SSYS looked before me an H pattern on the 5 today. Guess what? SSYS didn't exactly trade super strong today, so yes, looking at this chart right here, if I get a move down, and if I have my my open looks like it's going to be an H, I would definitely look to short this thing. You know, I don't generally think it works that way, but with a chart like this, where it closed like this, and if it opens around flat and starts going lower, yes, I will definitely be looking at that for a possible short tomorrow.
Thanks. Steve just repeated my answer, but he does that a lot in our room. He will constantly just say
Actually,
what
I
I
didn't repeat
say.
your answer.
Um, any other questions?
Okay, now, gang, real quick, I'm going to give you a couple of email addresses. These are our sales guys, so write these down. Sammy, S-A-M-I, said, S-A-I-D, at T3Live.com, and Soren, S-O-R-E-N, Anderson, that's A-N-D-E-R-S-O-N, at T3Live.com. Those are the guys that you'll want to talk to. Like Mike said, if all 280 of you are signing up, they'll be a little busy, but make sure you send an email and tell them you're interested. I'm going to turn the screen over to Mike Milani now. Mike, if you're there, go ahead.
Guys, thank you very much. I want to say that that was awesome. I mean, I learned a little bit myself from this. One of the things I wanted to say about Mike and Steve specifically is that, you know, it's obviously very important to know when to trade and to know what stocks to be in and to know, you know, how to maximize your trading day. But one of the things that these guys do very, very well is they tell you when not to be in the markets. Mike Lee, you know, touched on this before, where there are days at 10 o'clock in the morning, he's out of the office, he's made his X number of dollars, hit his goal for the day, and he takes off. Steve as well. So one of the things, the really big advantages to listening to these guys is the fact that, again, they're pushing hard when the market's doing well, and they've got their hands up, and they know when to take their foot off the gas when it's not doing well. Again, one more thing before you guys go. I just want to thank everybody for attending. Earnings season starts on Monday, and that's the reason why we wanted to get this webinar in before that. Mike and Steve are predominantly open traders, traders in active markets, traders in high beta stocks, and they're at best during earnings season. So starting on Monday, these guys are going to be working with their room, making sure everyone is up to speed, making sure they're in the right stocks, making sure that their research is all done. For everyone that attended